What's going on, everybody? I hope you guys are all having a great day. The title of this video is Reshaping the Financial System as the World Burns, which certainly I think many of us can kind of attest to over the past couple of years here. It has been quite interesting to be going through as normal citizens across, the entire globe. First and foremost, we saw late last week that the U.S. Fed. What I'm going to try to do here is basically showcase to you guys. I guess I should use this as a kind of a preemptive strike here. Showcase to you guys some of the things that I look at on a daily basis. They might not be about a coin going to the moon overnight. They might not be about whatever you want to assume that I'm going to be talking about, but it's very much so dealing in pretty much a reshaping of the entire financial system across the board. Digital assets, cryptocurrencies hit about a $3 trillion market cap last year. The prior cycle to that, they hit about an $850 billion market cap. This is all kind of leading me to hopefully opening a few eyes to just understand how big this truly is and what's actually occurring and how long this has been going on for. First and foremost, at the end of last week, we see that the U.S., so the Federal Reserve, planning to open up pathways for crypto banks to tap the central banking system. As usual, CoinDesk does not get it right by stating that this started in 2021. This process or this guidance started in 2021. Started much earlier than that. Essentially, what this is dealing in is same risk, same rules, same regulation. So we see right now that a lot of traditional financial institutions, a lot of banks are reaching out and touching cryptocurrencies and digital assets in one form or another. So they're very ingrained into the system right now. What has not occurred yet is regulatory clarity from what these crypto exchanges actually represent. And what they really represent is they're basically banking entities without being banking entities from a liquidity standpoint, from a utilization standpoint. A lot of individuals and people that are in the crypto space and even institutions use crypto exchanges as a medium between other financial institutions, other exchanges. They use these crypto exchanges for liquidity, etc. So they're essentially talking about building this three-tiered system. Now, CoinDesk says this started in 2021. Just to give you a background here, you can see the comments on the original proposal. Now, these are especially the way that this started was basically 2017, and it came from the Office of the Comptroller of the Currency. I believe at that time it was Joseph Otting. I could be incorrect there, but 2016. And they were essentially proposing special national purpose bank charters for fintechs that operated as non-depository institutions. This comes from just last week, cryptocurrency custody banks, etc. within the Fed. But this is the original kind of framework around this, the Office of the Comptroller of the Currency. Now, many of you watching this may not know what the OCC or the Office of the Comptroller of the Currency is. We know Brian Brooks was, just left, essentially, from a crypto job, and I think he's back in a crypto job again. The OCC, or the Office of the Comptroller of the Currency, is essentially the head banking regulator of all the banks in the United States. Okay, so they operate kind of as that oversight aspect in the United States. This goes all the way back to 2016, though, exploring special purpose national bank charters for fintech companies. We have to ask ourselves why these frameworks were starting to surround themselves in 2016. Obviously, digital assets. One example that I will say is Ripple and the Interledger Protocol, which is essentially kind of this, it doesn't care what value you're transmitting over. It doesn't have to be a crypto. It can be anything, but Ripple invented the Interledger Protocol, gifted it to the W3C, who essentially operates all of the internet rules as we know them today. Ripple essentially, through a couple of documents in 2015, 2016, looked at as an actual bank. And I think that, that may not be the exact case now. I'm just using that as an example because I do believe a lot of exchanges, cryptocurrency exchanges, and blockchain organizations that deal in liquidity and that deal in money transfers, etc. Like I said, same risk, same rules, same regulation, are going to be interpreted as banks. When we do kind of see this flushing out of value, where it's basically going to be this this cascade, this volcano erupting effect that is going to be migrating a lot of traditional assets and traditional ecosystems into digital digitization, which deals in crypto, digital currency, etc. This started all the way back then, though. So, this from 2016. They're talking about basically the history of regulatory frameworks, etc. Now they're talking about deciding to grant national special purpose fintech charters or special purpose bank charters to particular fintech companies. I actually did a video on this in 2000 and I think it was 2019 when SPQR Media was still around in the XRP community, and I think all those videos have been taken down for God knows what reason. But yeah, I mean, I explored this all the way back then. This is not a new discussion. What's curious to me, though, is that you see all of these nations innovating. You see all of this innovation occurring kind of outside of the United States, and the U.S. has been so slow to really provide, at a very bare minimum, some sort of a sandbox. And a sandbox from the tech standpoint basically means that everybody can operate freely, use their protocols. They get they get a little bit of oversight, but it's not going to be any sort of a lawsuit from the SEC or any of this crazy type stuff. We don't even really have that in the United States right now. You're going to really start to see a shift overseas. We've already seen it. Singapore, Japan, even China. You can bring up China for how far along they are with their digital currency initiatives, which I think 2024 they plan on kind of a mainstream rollout. And the U.S. can't even update the faster payment system through the Fed, through Pay Now. So whistleblowers accused the FDIC of stifling crypto companies' access to banks. This was published August 17th. Federal regulators could be going too far in encouraging banks to not work with crypto companies. Senator Toomey of Pennsylvania sent a letter to the acting chairman of the FDIC, which is the Federal Deposit Insurance Corporation, reporting that whistleblowers have come forward to state that the FDIC is improperly taking action to deter banks from doing business with lawful cryptocurrency-related companies. I can state this as 1,000% fact with starting Genfinity about actually a little over a year ago now. Anytime that we talked about dealing with cryptocurrency, it was like, well, we're not going to give you a bank account. And it's just much easier to facilitate all these things in other nations right now. All right, so again, reshaping kind of the global economy, reshaping the financial industry, reshaping all of these things as the world burns. We have a lot of rhetoric consistently coming out from the World Economic Forum. And 5 technologies that will transform our lives. This came out a couple of days ago. AI, or artificial intelligence. Virtual reality, or VR, certainly deals in some metaverse aspects there. Gene editing technologies is number 3. That's a little bit frightening. Blockchain is number 4, and nanotech is number 5. Essentially putting the exact same technology that you would put into this, into this, into this, into this, into this, into this. But yeah, I mean, we're seeing this across the board, ladies and gentlemen. Crypto.com now getting UK regulatory approval. They're dealing with, they're compliant with AML, which is anti-money laundering, if you weren't aware, and terrorist financing rules under the regulatory purview of the UK. Also, watch what they do, not what they say, on a consistent basis. This is a very eye-opening chart for you. This is another thing that you could probably show some people that you may know that don't believe in cryptocurrency, that don't believe in digital assets. This is most active investors in public, or most active investors in blockchain companies by the top 100 public companies. Now, this is measured from September of 2021 to June of 2021. 2022. If you're not aware, Alphabet is essentially the parent company of Google. $1.5 billion in 4 rounds for Fireblocks, Dapper Labs, Voltage, and Digital Currency Group. Fireblocks claims that they are the quote-unquote SWIFT for cryptocurrency. Fireblocks is where the former SEC chairman, Jay Clayton, left his tenure early after suing Ripple one day before he left 2 weeks early, and moved to Fireblocks in an advisory position. You've got BlackRock essentially running the world, right? They've essentially invested almost $1.2 billion in Circle, FTX, which is an exchange, and Anchorage Digital. Morgan Stanley, Samsung, Goldman Sachs, BNY Mellon, PayPal, Microsoft, Commonwealth Bank, Tencent, which is a giant, Citi, Wells Fargo, LG, and American Express. It was funny to me because, I mean, it's very clear cut and dry where this space is going. The big money is trying to have their seat at the table, and you better damn well believe the big money is stopping how quickly this space could be regulated, because they want to make sure that they don't lose out, that they don't die whenever this space truly takes over, which, if you've been here long enough, we all know that it is. And also not silently in crypto as the governing council and consensus node runner. So this is Christian Hasker. I believe he's the CMO at Swirlds now, obviously still tied very deeply into Hedera Hashgraph, the Hedera ecosystem. Talking about public, this is important to pay attention to, but governing council members that are essentially running consensus nodes. Now, basically think of a node as a computer, right? Just like banks have multiple computers that validate those networks, a node is the same thing, but it's just with a protocol or a blockchain or a distributed ledger. They're all basically validating consensus. What consensus means is if there's transactions on a network and all of the different computers, or AKA nodes, on that network agree that this transaction was a real transaction, we can prove it out. It basically gets put into the ledger as as history, and the ledger keeps moving forward and forward and forward. These are actual consensus validators on Hedera's network, though. You have organizations such as Avery Dennison, you've got Boeing, you've got Chainlink, you've got DBS, you've got Dentons. I mean, I could run the gamut here. Google's on here. Fidelity Information Services, FTPOS, the entire ACH system of Australia, Deutsche Telekom, etc. I only said etc. twice in this video, so I won't say it anymore because I know I have comments down there that I say that all the time. Moving forward, though, even the Digital Pound Foundation. Congratulations to Brad Garlinghouse, Joel Katz, etc. I caught myself for being voted by, this is at Incorporated, as one of the fastest growing companies in the U.S. Fantastic. Look at World Bank. They're International Finance Corp, okay? Dealing in carbon offsets. And this deals directly in this Chai blockchain. I'm not going to get overly into this. I posted this to Patreon. There's a bunch of really interesting slides about kind of this carbon offsetting marketplace and data warehouse. Chai blockchain right now, this is not financial advice. I don't hold any personally. It's like about a $200 million market cap right now. But this deals directly with the World Bank. World Bank, their organization IFC that ties into World Bank, deals directly with Chai, and there's a World Bank presentation that shows that data warehouse tying directly into Chai as well. I thought it was interesting enough to showcase to you guys. European Central Bank stepping in as banks dip their toes into the crypto pool. All right, you've got Mercedes-Benz, LVMH, OTB, Richemont, and Prada joining this LVMH blockchain consortium. All of this being said, you've got the housing affordability index at the lowest it's been since 1989. Back then, we had an average of 10.3% mortgage rates. Housing today is less affordable than the housing bubble of 2006. Either interest rates will have to come down a lot, or real estate prices will have to come up substantially. Now, I've got the Bank of England basically saying after UK inflation again outpaces forecast, and only a 13% peak looks optimistic, so might get a little bit worse than that. Now, looking at the entire cryptocurrency market cap as a whole, like I talked about previously, we peaked out at about $3 trillion last year. We peaked out at about $800 billion the previous cycle. The question needs to be asked, once we start having regulatory clarity, which is coming, and it's coming soon, with all the testing that these organizations, these financial institutions have been doing, what do you think happens? Number one, to the crypto market cap as a whole. Now, this isn't financial advice. This is freaking common sense. Number two, what do you think happens to assets dealing in utility that have been tested out literally for 7-8 years, whatever it may have been? Ethereum goes back to 2015. Ripple goes back to around the same time frame. What do you think happens, or actually Ripple's older, what do you think happens whenever these organizations, these blockchains, these digital assets that deal in utility, these cryptos that deal in utility, start getting swallowed and utilized by the traditional financial ecosystems that we all know they've been playing with for years and years and years without regulatory clarity? It's going to be ridiculous. I'm going to leave you with this. This is an interview with Standard Chartered at CNBC. This was probably 4 months ago, and I got to give a shout out to Rust on here. They've been testing this stuff out for years, and he basically talks about XRP underpinning trade finance, etc., etc. 4 times you got the ETC in this video. I tried doing my best, but I'm going to play this video and I hope you guys enjoy it, and then I will let you go.
Have countries like Switzerland and China all testing out the digital currencies. How are you gearing up for the disruption of money with central bank digital currencies? How will it change the way you and other banks operate in future?
Probably fundamentally. While we're not formally involved, no foreign banks are involved in the Chinese ECNY. I think we're as close to that as we can be to understand how that digital currency can be used for cross-border trade.
Come on, laptop. Don't die on me now.
Digital currency under and trade finance and money settlement systems, and using as a medium of exchange, using things like Ripple's XRP, for example, as a medium to affect real-time cross-border.
Sorry about the blip there. I don't know why my internet died out, but I hope you guys enjoyed this video, and I will talk to you when I talk to you. Literally talking about using XRP to underpin cross-border payments, settlements, etc. in trade finance, and this was 5 years ago. Think about where we're at now. Hope you guys enjoyed this. Bye.